What's up, guys? This is a great topic today that I love talking about because it shows how you can still make mistakes in real estate investing and self-storage and be very successful. I love talking about the experience of learning, right? This applied knowledge that you have to get while learning anything, whether it's entrepreneurship, whether it's investing, and whether it's self-storage. There is a learning curve, but that learning curve can be profitable. So before we get into it and get started how we started and scaled on just one facility with $200,000 and took it to over $4 million, first I need you to like and subscribe because that tells me that this content is good and you want to see more of it and I can give more case studies and a lot more stuff. So please like and subscribe. Okay, now that I got that out of the way, the key to self-storage is operations. Now, at first, that may sound like a lot of work, and I don't want it to be that way. So let me explain how we got started. Our first facility was in a small facility out in the middle of nowhere. Nowhere. It was in the middle of the mountains of Idaho. There's more grizzly bears than people there, and it was more of an outpost than it was even actually a storage facility. There were 3 buildings. There was no gate. There was no office. There was no operations. There was, gravel, but it's what we could afford and what we bought at the time. So we wanted to be in self-storage for a whole multitude of reasons. We had some grand philosophies and we were going to try to build a kingdom, and that's where we started. Now, the great thing about this facility is it taught us a few things. That self-storage, first of all, was very forgiving because this was 9 hours from where we lived. It was not close. I was not running down there every single day and checking up on things. That wasn't happening. So when we purchased it, we contracted out with somebody local to do some of the on-site things, right? To do some of the on-site management, and really what that meant was change locks and open it up. And it wasn't a management company, right? This was like a real estate agent, just somebody that was nearby. And then we tried to do on the back end, right, the bill collecting and the financing from where we lived. This didn't go great, but it didn't go bad. We didn't really know what we were doing. And when we took this facility and we kept it going, we realized a few fundamental things. First of all, there probably wasn't a lot of upside on this facility. There wasn't a lot of ways where to go with the facility that we had purchased. So we knew that there wasn't anywhere to go with it. We sold it. Now, we sold this facility, and we sold it right about the $650,000 that we purchased it for. So we put $200,000 into this facility. We didn't really put any money into it. There wasn't a whole lot to do. And we knew that the ROI of putting any money wouldn't get into it. We figured that out. And so we definitely knew it was time to go. So after we sold it, we took out, after we'd owned it for a few years, so we'd been paying down debt, right? And it had a little cash flow. So we got, I think, $250,000 out of it after we sold it. So we sold it less than we bought it for, but not at a loss, if that makes sense. Now, I enjoyed this because, first of all, we got a 1031 exchange it. This is really important because it taught me the power of real estate. And the 1031 exchange means I took that money out, right? So we took that $250,000 out, now a little more, and we put it into another storage facility and didn't pay taxes. Once again, this is a great learning experience. I wasn't from real estate, right? I was a sales guy, an insurance sales guy. And my eyes were becoming open to all these possibilities. But 2, owning that facility, we found another one that we said, hey, this one has a lot of upside. This one has the things that this one doesn't to make it better. So we took the money out of that one, we put it into the other one tax-free. Roughly the same. The difference was on this one is we could increase prices and we could change the operations and run it better. So this one we learned and we bought it right, from a standpoint that we identified a good facility, that upside potential. Then we turned that facility around. When I say turn that facility around, let me be clear. We didn't put tons of capital expenditures, just that money that we'd taken out and put it in. It needed operational improvements. There was high delinquencies. The market rates weren't there. The manager on site wasn't doing a very good job. All we did is we came in, we changed up some of the things on operations, like added advertisements and collected the bills. Nothing extreme. but it had a very extreme impact on the revenue. After those collections started coming in and after those increased rates started coming in, that increased the value of the asset because self-storage is based upon revenue. We buy off cap rates, and cap rates are based upon a percentage of revenue. So as that revenue comes up, right, and that cap rate, actually, we got a lower cap rate, which is simply a cap rate suggests the percentage of return that you're going to get on purchasing the facility. So if revenue goes up, you're going to get a higher return. So even if we sold it at the same cap rate, we have that increased value. That increased value was substantial because of the increased revenue. In fact, it was to the tune of $1 million. And this was 8 months after we'd bought it. Now, we had two options. We could either keep that asset, let it cash flow, or we could take that $1 million out and do what we had already done. 1031 exchange that into another asset. That's exactly what we did. We sold it, we 1031 exchanged, so we didn't pay taxes on the $1 million, and we bought another facility for $3.8 million. Now, this facility was much larger. That meant the impact of our improvements operationally was much greater. Also, there was extra land, which meant we could expand it. We bought it, we improved that facility, we expanded it, added more units after we improved it. That meant we didn't have to put more money into it because it was worth more, so we could capitalize on that worth, take out a loan, build more units out. Now that unit today that we purchased for $3.8 million is worth well over $8 million. It's roughly 80,000 square feet. This all came from the $200,000 that we bought a facility out in the middle of nowhere that we spent on a facility worth around $650,000 out in the middle of nowhere. This progression stuck with me, of course, right? 200,000 to millions. But more important than the money was what we learned on the way. It was how to identify value-based projects and how to improve them. And then we got to see the improvements, reuse that money, and get bigger. This is scaling both horizontally and vertically, because from that, then we took our money out and we could buy more without ever leaving the asset. And we could do this tax-free too because we did it through a loan, refinancing. So then we learned how to keep the assets, refinance, get our money out tax-free, and buy it again. We still own the asset, we still own the cash flow. Now we have another asset and we have cash flow coming from it. That creates scale. And really, that was the value. The millions were nice, but it was the education. That's what made the millions. Now, this is a great example to me because I'm like fond of the memories, right? But also for you. Don't expect to hit home runs. Don't expect your first project to just be one and done and you're set for life, right? Do the first project and do your best, but expect to learn and make sure that you lower your risks so you can learn on those projects. You need to create a system that is scalable and repeatable. This is how financial freedom is achieved. You also need to be patient and realize that, you know what, you're going to screw up. We did a lot, but that's okay as long as you're failing forward. Now, ways to avoid screwing up and tanking you is making sure you're not using too much debt and making sure that you're buying decent assets, right? So avoid the big potholes to keep your momentum going. This is velocity of money, right? And this is how you scale quickly. The key is to be able to continue, right? We're obsessed with progress. That's why we do what we do. I want to make an impact. We want freedom and progress. That's our 3 core principles, right? It was through that we started our private equity company and actually started taking on investment of other people so that they could participate in that too, right? It's the reason why we started Self-Storage Income, the educational. It's why we're doing these YouTube videos, right? That's all the impact part. It's all that we can all progress and get better. But that's a long-term view, right? We're not doing it for short-term gains, and neither should you. Take value in the education that you learn, take value in the process, and make sure you document everything so that that education will stick with you and you can remember it and reapply it. That is the true value in real estate, and that is the true value in doing value add projects where you keep getting bigger and bigger and utilizing velocity of money. All right, so how do you recreate those conditions for yourself? This is a really important tool that we use. It's called velocity of money. That means your money needs to keep moving up, right? It's how you scale. It's you're moving your money into better opportunities. You can do this through a sale or a refinance. Our example was taking advantage of the 1031 exchange and moving it, right? And so we didn't have to pay taxes. But this is also really important. We use a value add opportunity. So we don't just expect the markets to go up. I'm not relying on something that I have no control of to shape my future or my destiny. This is very important. I'm finding and acquiring facilities that have the potential immediately. So this is called the value add, right? All right, so how do you recreate these conditions? There's two aspects I want to touch on. The first is velocity of money. You're moving your capital into better opportunities that have more upside. You're scaling both horizontally and vertically, right? You want that arch. And that's what we did. Not only did we keep buying more, right? We bought bigger. Velocity of money and having your money turn over at a better use is really, really important. You can accomplish this not just by selling, but refinancing. And that's actually the primary way that we do it. We don't sell a lot. We usually refinance, take that capital, and buy more. It's a great strategy because, like a 1031 exchange, you don't have to pay taxes. All right, the second part I want to touch on that is extremely important. We don't sit around and wait for the market to make us money or for the market to shape our future or destiny. We employ a value add strategy. I'm looking at the difference of that facility and what the market is currently achieving, and I'm simply bringing it up to a known standard. The difference there is the value add strategy. Now, in this strategy, that allows us to create a lot of value, right? A lot of equity, higher cash flow, then we can refinance it quicker. It's not a sit around and wait mentality, right? We're moving and we want to move quickly. We need big returns, big value adds, because that allows us to move faster, create more wealth and income at a higher rate. It also makes it safer for us as we invest because it employs what I call a margin of safety. The margin of safety means I can screw up or the market can turn bad, but I have enough value and cash flow in there that if it does, we can weather those storms. One of the main reasons I love the value add strategy. So it's important to understand these two things when implementing into your strategy to scale your money quickly. Another important thing to utilize is OPM. OPM is other people's money, be it a bank or other investors. You need to make sure that you're utilizing it correctly while still reducing risk. But with those three things, anybody can scale to millions quickly. Okay, so how do you recreate? Okay.